Revolve? Yeah, just Revolve or?
Yeah, Revolve Renewable Power.
Okay,
Good?
Good afternoon, everybody. Now presenting Mike Clark with the Revolve Renewable Power.
Thank you very much, everyone. Thanks, everyone, for joining me here today. Before I jump into the presentation, just want to give you a bit of an overview in terms of what to expect over the next half hour or so, and hopefully some of the takeaways from this discussion as well. Obviously, as our name suggests, Revolve Renewable Power, we're in the renewable space. You know, we like wind, we like solar, we like small hydro. We pretty much do it all. But just being renewable, of course, and being quote unquote green doesn't really cut it, that alone. It's not a good enough reason to put your hard-earned dollars into a company. And so what I'm trying to illustrate for you today is, you know, what is the market opportunity that you're going to see or that we see right now? What is our strategy to take advantage of that market opportunity? And also a bit of background in terms of what the management team brings to the opportunity today, so that you can see that we have the experience and the ability to execute. So I'll walk you through our business model as well, which we think is tailor-made for sustainable growth, particularly in this industry. And ultimately, I'll show you how we make money from this business, because clearly that's the most important thing at the end of the day for any company. So that's the goal today: show you the opportunity and show you how we can take advantage of that opportunity on behalf of our shareholders. A couple of disclaimers there. So in terms of, you know, Revolve, we're a fast-growing renewable energy company. We focus on a very specific area within renewable energy. We're a developer and owner-operator of wind, solar, and small hydro projects, and it runs the gamut in terms of jurisdictions. We're operating in Canada and in Mexico, and we have development stage projects in the United States as well. And we're really focused on a specific business model, which really is the idea of focusing on projects that we can own and operate, so smaller projects we can own and operate and generate revenue from, while also developing larger projects that we can essentially sell at a later stage for development fees, and then recycle that capital into those recurring revenue projects. And really, we described it as a three-pillar approach. Develop and sell are these large-scale projects, so large CapEx, over $50 million, that, you know, as a 15, 20 million market cap company, we're unlikely to be able to build and own ourselves, but there's still a lot of value in developing them. So putting in place, you know, the site security, the permitting, getting them to a certain stage, and then selling them to a major, essentially. Beyond that, we have a develop and hold strategy as well, which are essentially smaller projects, sub 50 megawatts, small rooftop solar projects in Mexico, run-of-river project in British Columbia, that we want to develop and hold. So we want to own these long-term, generate long-term recurring revenue, and really that is the stable foundation of the company. And then beyond that, M&A expansion. We've done a few different deals over the course of the last couple of years. We've been public since 2022, and we really feel like there's quite a few opportunities in the marketplace right now to take advantage of not distressed assets, but under the radar or undervalued assets, given what's going on in the sort of broader world today. And so, again, at the end of the day, it is higher development returns from those larger projects being recycled into projects that we then own and operate. Renewable energy generally is a very capital-intensive business, especially what we're doing. So what we're trying to do is find a way to do that without overly diluting our shareholders. So bottom line for us, Q2 of this year, $625,000 US in revenue. Last year, so our fiscal year end is June 30th, we did just under $7 million US of revenue, $2.5 million of net income. Again, there's sort of two revenue streams there that contribute to that: the recurring revenue piece, and then also the sale of development stage assets. And we'll see that going forward as well. 12 megawatts right now in operation. So that consists of 2 run-of-river projects in British Columbia, a wind project in Alberta, and about 5 or 6 megawatts of rooftop solar, primarily in Mexico, in and around Mexico City, that we sell electricity to commercial customers. We have a target of about 100 megawatts, give or take, over the next year or so to get those to the ready-to-build stage. These are all projects that we hope to own and operate. So they range from a project in Alberta, which is about 16 megawatts, all the way up to a 50 megawatt wind project in the US that all have interconnection and are in advanced stages of permitting. and hope to be at that ready to build or notice to proceed stage later this year or early next year. And so you see where we're at right now in terms of our operating assets and our potential for growth. It's pretty explosive. The underlying foundation, especially in these difficult markets, recurring revenue, we love it, and we're building out that recurring revenue stream for the company. You'll see over the last couple of years that continues to grow over those operating assets that I described. And one of the more interesting things that we're up to right now is an acquisition that we're live on. So we have a binding offer in place for an operating wind project in the US. It is about 9.6 megawatts, so would just about double our operating capacity and just about double our recurring revenue as well. So a pretty significant acquisition for us. About 10.5 million US is the purchase price. We've already lined up 8 million US of that in debt from another group that's actually presenting here today, RE Royalties, who we have a strong relationship with. We've done deals with in the past. So for us, that gap is about 2.5 million US, so a pretty manageable amount to be able to pick up a pretty interesting project for us. It gives us an operating asset in the US, obviously. There are no issues with respect to tariffs. It's operating, has a long history in terms of the return from that project. These are the types of opportunities we look for, the sizing in terms of M&A. That $10 million, 10 megawatt is a real sweet spot for us. We don't want to try to go after the really large projects. So anything 10 megawatts and under is something that's definitely in our radar or on our radar. So the overview, we're an operator, developer. We have a diverse portfolio of projects, proven technologies. We're not a technology company. We buy panels, we buy turbines from reputable manufacturers. We don't have any technology risk. We have a long track record. I said we went public in 2022, but we've been around since 2012. So a long history of developing this large pipeline of projects that we have. And again, North American platform. So as we see right now, it's a bit chaotic generally with the tariff situation. For us, we have opportunities in Canada, the US, and in Mexico. So if we need to focus on one over another, we can do that pretty quickly. There's a couple slides here that show basically our portfolio. I won't go into too much detail here other than to say, the blue ones there, operating assets. Again, they run the sort of gamut from hydro to solar to a wind project in Alberta. And then late stage development projects. So those ones in the darker green there are advanced stage. And so those are projects that we're very close to being to that ready to build stage. So essentially making that final investment decision where we decide if we're going to own and operate it or if we're going to sell it for a developer fee. Those ones primarily we're looking to own and operate, except for the Mexico wind project, which is over 100 megawatts that we'll chat about a little bit later in terms of Mexico, but one that we would be looking to sell. I talked about our experience before in terms of some of the projects we've sold. You see down at the bottom there, over a lifetime, we've sold several different types of projects, some large, some small, but that's our business. We take the project to a certain stage, we determine whether it makes sense for us to own and operate. If it doesn't, for whatever reason, we sell it to usually a larger company who can take it across the line. So this is that three-pillar approach. Again, a little bit more detail there in terms of the types of projects and the reasons why we break it down this way. Ultimately, we will develop the project up to a point and then make the decision. The large-scale utility projects, all of those we're selling at this stage. Until we're at sort of a $500 million market cap or something like that, where we have access to lower cost of capital, we're not going to be building a $100 million CapEx project today. And so we know that, but we can still create value by developing and then selling those projects. Mid-size utility are, again, those projects in the sort of 5 to 10 megawatt range for us ideally, and then distributed generation. These are usually solar projects that are on a commercial entity, on a business's rooftop, where we enter into a 10 to 15-year contract to sell them electricity. You'll see across all of these, we're a power company, we sell electricity. That is the product that we're selling. We make a margin on it. Just depends on sort of whether we own and operate it or whether we sell that asset to someone else to complete the build of it. And then underpinning it all is the M&A expansion piece. Again, a bit of a deeper dive in terms of the actual portfolio there, and you see on the right-hand side there, the distributed generation portfolio for us. Those are all the projects that are primarily in Mexico. And I should back up and say, as a company, we're founded by a gentleman in Ireland and a gentleman in Mexico City. So that's sort of, they were actually doing some mineral exploration down there and decided that to take a run at renewables. And that really explains our Mexican footprint. We have large-scale utility projects down there, as well as these operating assets, and we have a team of about 12 people down in Mexico City as well. So utility scale development, sometimes people ask us, why don't you just focus on one specific thing? And we kind of think we do. We focus on project development, and then make a determination based on the status of that project, where it goes at a certain point. The utility scale development projects, relatively low cost in terms of developing it. You can see as you move along the development path, as you get permitting you get site security in place, you get permitting in place, you get interconnection in place, you're increasing the value of that asset essentially. It takes a little bit more time though as well, and especially as a public company, these projects can take anywhere from 4 to 5 to 6 or 7 years to go from inception to the point where you execute and either build or sell that. As a small cap company, telling people to wait 6 years to see a return on their investment, probably not happening, which is why we really love the recurring revenue aspect of the business as well, which primarily plays into the distributed generation piece as well. These are good returning projects, so good IRRs, a little bit more difficult to scale because these are about, for us, $500,000 CapEx. We can move fast. We can, from the sale to the customer to installation, can be as little as 3 months. So it's a relatively straightforward process. We talk to the business owner. We tell them how much money they can save on their electric bill. We build it, we fund everything, and we sell them electricity at a discount. It's a very straightforward business model. Obviously, there's more that goes into it from a design and engineering and a financial modeling perspective, but from the customer's perspective, they just save money on their OpEx. So it's a really neat solution for customers. So digging a bit more into those 3 models there, that first pillar in terms of develop and sell, we have done this historically. You saw those yellow projects that I listed on one of those slides. One of the biggest ones that we sold, completed the sale of a 1.25 gigawatt project in Arizona. So a very large project that we clearly would not be able to build, but we managed to secure interconnection rights on that project and then sold it to a group called NG, large utility, for a significant amount of money. So we give a range. We're only allowed to disclose certain numbers in terms of the range, but it's at $40,000 to $50,000 a megawatt type range. We've already received about $6.5 million US, and we invested about $1 million in that project. So I'm not going to tell you every one of the projects is going to return that, but without a doubt, those are the sort of development returns that you see. Definitely a 4 to 5x. There's just a time frame to it in terms of when you receive that money. Now, Mexico is interesting because we have been involved in Mexico, since 2012, and there's been some fluctuations there politically, without a doubt. The previous regime that was in place sounded pro-renewables, but clearly wasn't. The new government in Mexico is absolutely pro-renewables. They were elected, and as of last month, they have new regulations in place that do a couple things for us. They've committed to streamlining some of the permitting. They have a 30 gigawatt by 2030 target, which is extremely ambitious. And so what they're looking for are basically shovel-ready projects or projects that have already gone down the development path. And we have about 500 megawatts of projects that are just in that state. They're kind of on care and maintenance for the last 5 years or so. Change in government, change in regulations, significant value now. So as you see what we're going to be doing over the course of 2025, you'll definitely see some news on those 2 projects, El 24 and Presa Nueva, as we look to potentially sell those assets. So the recurring revenue piece, love the recurring revenue without a doubt. 12 megawatts right now that we own and operate. And then there's those late stage projects as well in Alberta, a wind project in the US and a battery storage project in the US as well. Again, these are all, they have different customers. Some of them have a business as the customer. Some have a utility as the customer. Our project in Medicine Hat, the city of Medicine Hat, is the customer. So there's a variety of different customers, but the projects are all the same. They're renewable energy projects that generate electricity that get sold to a customer essentially. So those advanced stage projects, 85 to 100 megawatts or so, are looking to be in a place by the end of this year, if not early 2026, where they're ready to build. And then we would, all things being equal, move into construction on those. We think we spread them out and space them out nicely. So if you think of, an 85 megawatts worth of projects, CapEx on that, anywhere from 100 to 150 million, we're not going to have to go and provide the equity for that all in one fell swoop. So they'll be spaced out. So we're not going to be going to market trying to raise 20 or 30 million dollars, which obviously would be very difficult in the current situation. Talk a bit about M&A as well. We're very specific and focused in terms of where we are looking for opportunities on the M&A space. Operating assets, operating assets, operating assets. We love the cash flow. And projects within this size, sort of 10 megawatts and under, we're seeing a lot of opportunity. Usually it's larger companies that have non-core assets. They're looking to exit for a variety of reasons. They're not distressed, so they're good returning projects. We have a hurdle rate that we look for that allows us to borrow money from someone like RE Royalties, still make a return, and then ultimately refinance that debt and bring in some term debt to these projects. So we've done it a few times already. The last one there, the Bright Meadows, a very late stage project that we acquired, and we've moved across the line, and we're just about to send into final permitting. Centrica in Mexico, that kind of kicked off our Mexican operating assets, and then we acquired Wind River Power a couple of years ago, which forms the basis of our Canadian operating assets. So our growth strategy, if you take a look at this in terms of a target, that we put out there, and again, there's some caveats there, obviously. We'll walk through sort of how we get to these numbers. But midterm target, in that sort of 1 to 2 year time range, 15 million in revenue, US 10 million in EBITDA. And, for us, really, this is a conservative estimate for us. This would not include something like that acquisition that we talked about earlier. It wouldn't include other potential acquisitions either. What it does include is those projects that we described in terms of getting those to ready to build stage, those sort of 85 megawatts. It's essentially those projects. So you can track our progress quite clearly as we move those projects down the path and towards ready to build. So how do we grow? We're going to grow a few different ways. Definitely, we're going to continue to build out that distributed generation portfolio in Mexico. We sign up customers to build, those sort of half megawatt solar projects, move those through relatively quickly, adds to our recurring revenue. The utility scale projects that I described, those will be moving forward this year as well. And then growth opportunities, both in the DG and the utility or the operating side of the business in terms of M&A acquisition. Definitely looking at a few different opportunities there. There's quite a few in the marketplace right now. Just a broad sort of comment in terms of, where we see the growth. As I said, we're a power company. We just really love renewables because we see the market opportunity there. It's the fastest growing part of energy generation globally right now. This is where the money is going. It's the cheapest form of electricity generation. We don't think we're going to take over the world in the next 5 years or anything like that, but we know that it's a growing part of the market. And we can absolutely take a big chunk of that, given the focus that we have on the specific sizes of projects. There's not a lot of competition for these types and sizes of projects because what you're seeing is a real sort of flight to size. The bigger players are going after 100, 200, 300 megawatt projects, and they're ignoring these kind of projects. And so for a company of our size to get to a much larger scale quite quickly, it's a relatively straightforward path. Yeah, things can always go wrong, obviously, but I think we have a really good plan to be able to take advantage of it. The things that drive electricity demand in general help us. AI, data centers, the electrification of everything. Everyone is turning towards renewables now to fill that gap. And if we look at nearshoring in Mexico as well, one of the repercussions of the tariff war, or however you want to describe it, is that places like Mexico, places like Canada, and of course US, they're bringing back manufacturing as fast as possible. They were already doing that in Mexico, actually, primarily to provide products into the US. So there's a really big manufacturing base there that we can provide electricity to that's driving in Mexico that reimagining, I guess you could say, of the regulations in terms of where the government is looking to generate new electricity from. I'm not going to touch too much on our target markets. I think everyone sort of understands, the US, Canada, and Mexico. Each have its own challenges, without a doubt. We can move fast in Mexico, but until, very recently, regulatory challenges, sort of stood in the way of larger projects. The US, until the election, I would have said, that was absolutely a target market for us. And it still is, but for very specific types of projects. You want to make sure that you are focused, for us at least, I think, on solar. I think there's a lot more acceptance from the current administration for solar than there is necessarily for wind. But having said that, with all of these projects, it's about how you site it. It's the type of support that you get in the local community and the partners that you have on board to be able to move them forward. In Canada, we love Canada. I mean, we have operating assets in Canada. We have development stage projects in Canada. I'm based in Vancouver, and I think it's fair to say that we're going to see some expansion within Canada, both on the distributed generation, so selling to smaller businesses and putting it on the rooftop, but also utility scale solar and wind projects. Our track record there, again, started in 2012. The two founders of the company, Steve and Omar. Steve is our executive chairman, so I actually joined the company about 6 months ago after running another solar company in the US for about 6 years. Steve is our executive chairman. He is now 100% focused on M&A activity. He's a former project financer, investment banker, and so we've kind of really delineated the responsibilities. I'm clearly responsible for some capital markets outreach and also running the company. But what it's allowed us to do is really take on more with respect to opportunities in the M&A space and run some interesting projects through that process. All the way up to 2024, we've done a few different acquisitions. We've exited certain projects. We've built projects. We've kind of done it all on a smaller scale. All that to say is that we are an executing company. We are an operating company that is generating revenue. Last year was profitable. And hope to continue that. I'll let you take a look at that at your leisure. But in terms of our senior management team, myself, Tanya, our CFO, based in Vancouver, Omar leads the team down in Mexico City, and Steve is our executive chairman now. And again, our board of directors will allow you to take a look at that as well. Cap structure, pretty tight, about 55% closely held by those founders and other founding shareholders as well. Which is really nice. And that's kind of it in terms of the cap structure. Again, happy to answer any of those questions that you have. But a pretty clean balance sheet. All of that debt is project level debt, essentially. So it's not corporate debt to pay my salary or anything like that. And so we think it's a sustainable model, definitely. Looking forward over the next 12 months, I think a lot of the things that I touched on here, revenue, cash flow, complete this acquisition of the US wind project, get that under our belt. Maybe take a look at one or two others. Continue to build out what we're doing in the US and in Canada, specifically on the utility and the distributed generation side of things. Advance those projects in Mexico, those two large projects in Mexico, to the point of sale, likely. And then continued M&A opportunity. As opportunities come up, we assess them and move forward where appropriate. That's the Revolve story. Happy to answer any questions if anyone has any. Yes. So the tax credits are still in place in the US, so they haven't been impacted. They're hugely beneficial. I would say the tax credits in the US have driven the renewables industry over the last sort of 10 years or so. There's a lot of rumblings about what may happen in the future. I don't know that anyone has any good line of sight in terms of what may happen. One of the things about the tax credits is they do drive a lot of domestic manufacturing because there is a domestic content requirement for certain portions of it. We don't see it as a huge risk. They do tail off anyway over time. So I think as we get into sort of 2030, those likely will disappear anyway, or there'll be a lower base level ITC that's in place. But they're absolutely beneficial for the project owner if it's a business owner. They see a 30% credit to their tax liability, right? So it's a benefit. All I can say is wait and see. I don't know there's been any really good direction from the administration. For us as a company, there's the same ITC is in place now in Canada, and so that's quite beneficial for us. There's definitely regulatory certainty, regardless of the election that's going on right now. They're all supportive of the sort of status quo, I would suggest. And so from that perspective, advancing projects in Canada for us makes a ton of sense because that ITC is now in place in Canada as well. And it just came in somewhat recently. So it's starting a bit of a, not a gold rush in Canada, but there's definitely a lot more interest because of it. Yeah.
So the solar panels that are not the prices of the solar panels on low water.
Mm-hmm.
Are for keeping solar plants much more profitable than other renewables?
So it depends. It depends on the location, depends on on the site, the location where you are. So if this comes around to sort of the tariffs again, but in terms of like the actual sort of cost of them, absolutely, the cost of panels has dropped, significantly over the last 5 years or 10 years, right? So, from our perspective, usually what happens is a lot of those savings get passed on to the customer to make it more profitable for the customer. Because usually for us, especially on the sort of distributed generation side of the business, we look to hit a cost savings for the customer. And so essentially what happens is some of that gets passed on to them in terms of the cost of the panels. But yeah, they've come down significantly, as has the cost of wind as well. You layer battery storage into that as well. And it's without a doubt, wind and solar, again, depending on the region and depending on sort of when it's generating power and what you're being paid by the utility, it's the lowest form of new energy, electricity generation out there. You're not building anything any cheaper. Yeah, so interconnection primarily, and so there is, it's going through, so the interconnection process for the first one, the 130 megawatt project, it's already in interconnection, it's already got the initial study, and so it was quite interesting because we were waiting for the results of that particular study, and as soon as these regulations came out, we received the results within about a week or two. So it happened pretty quick. So it's all related to interconnection in terms of our study. So we have the land secured. We have several years of wind data as well from operating MET towers, meteorological towers. So it relates to interconnection. The question for us is at what point do we exit, right? At what point is there the most interest in those projects for a larger player to come in and pay us? Yeah. So you look at the one project we have already sold, that 1.25 gigawatt project. We've already received $6.5 million, and the bulk of that is the bulk of the remainder is still to come, 40 to 50,000 a megawatt. So you can do the rough math. It's over $40 million. Now there are milestone payments from that developer that they have to meet those milestones, which are notice to proceed and commercial operation. But that's the model there. Absolutely, there's a huge return if you're developing a project in the right area and you have interconnection. So we don't disclose it at this stage. We don't disclose it. It's sort of, we give I'll chat with you offline, but we give a range in terms of the sort of regular development cycles of a project, but it's not disclosed. Thank you. Yeah.